I mean, I think the Fed's plans have been clear. There may have been some presumption that they would somehow stop or pause earlier, but as the economy continues to run strong, the plans are very clear that they're going to raise not more quickly, but every quarter until they get closer to something that looks like a neutral interest rate, which is still a couple of interest rate hikes from here.
But neutral, that is a question that a lot of people have. Where is neutral? Jay Powell's comments that we're nowhere near neutral right now, and we're going to blow right through it.
Yeah, I mean, I think the market maybe overinterpreted his comments. He was just describing what is in their forecasts, which is that it's about 3 or 4 interest rate hikes from here. That's their best guess. But they'll be watching things like financial market conditions, things like the economic performance, inflation, to determine where neutral is. And he's carving out sort of a wide area for them to assess things, to be patient, to pause, or to keep going, depending on how the economy is performing.
Phillip, we spoke with Peter Fisher earlier, who talked to us a little bit about this, too. He thinks part of what the market is reacting to is just this idea that we could be in late cycle, that we could be to the point where the Fed's really going to have to start raising rates more as the economy continues to pick up on all of these things. He also suggested that, look, the idea of the dot plots, just the forecast from the Fed about where they think those rate hikes are going to be, that's going to have to come away because nobody knows how quickly things are going to happen. At this point, we really are data dependent. You agree with that?
I do agree with that. And I think the Fed wisely had left a lot of room for 2 more hikes or 4 more hikes. And what's happened in the last couple of days is we've had this series of Fed speakers who led market participants to think they really meant 4 and probably a little bit faster than they had implied before. So I don't think the Fed meant to do that, and it was just a little bit of a glitch in their communication. And I suspect over the next couple of days they'll dial that back.
They'll dial it back because they won't really mean that they're going to do 4, or they'll dial it back to mean, well, we just don't know.
I think the latter. They just don't know. They didn't mean to get people focused on 4 at this point because, like Peter Fisher told you, they just don't know. They left too little uncertainty, I think.
Julia, it's interesting that you see the different markets' reaction to Powell's comments and a lot of the rhetoric that's happened since then. The bond market really has not had any kind of new panic, right? Yeah, it seems like a dramatic move going from 280 to 320. The stock market, perhaps, had been maybe playing their hand too heavily and thinking there might be a pause, or maybe this is all an excuse for what the stock market is.
I mean, I think this is what financial conditions do when the Fed starts normalizing policy. You know, they are supposed to tighten. Some risk premia is supposed to come back into the markets. And the stock market had been sort of holding on to this very rosy view that we're going to get both strong earnings in a strong economy and permanently low interest rates. And those two things don't really go together. If you've got one, then you're going to have higher interest rates. And so it's sort of a natural process. I mean, Secretary Mnuchin called it a natural correction. It's absolutely a natural correction. Equity premia, risk premia in general have been fully priced, shall we say, and to see some steam come out of that it seems like a natural part of the cycle.
Tom, what's your interpretation as somebody who's looking at the equity market as a result when you hear this conversation?
Well, it's clear the market hasn't been comfortable with both Fed visibility and with the level of interest rates. So, you know, communication is a huge part of the Fed policy, but
it was to try and calm markets when we were in chaotic times. If you look back beyond the last 10 years before that, it wasn't such a big priority, and maybe we're going to get back to that position. Can the market handle it?
Yes, and I think as long as we have good economic fundamentals, and that's kind of what we have right now, you know, good labor market, and, you know, companies have decent profitability. So I think there's a lot of resilience in equities right now.